First of all, your thoughts on this market, the market direction we're seeing recently. Like I mentioned, it's really a story of profit taking today.
Yeah.
Where do you see it going for the rest of the week?
Well, coming off where the market stopped last week, where it did over 5% in appreciation, it's expected that as people begin to settle down to the trading week, people might want to take some profits. And also, as the analysts and traders, they await the outlook for the market. Analysts are coming out with their outlook for the market. People might also want to take a step back and say, all right, let's just be clear as to the fundamentals of this market before we actually take our positions. So what we've just seen today is that probably some of the stocks that have seen some rally last week, the traders or the dealers might be willing to take profit now. That's what happened today.
One of the things that obviously sparked this market's rally, the recent rally, of course, is the AMCON deal with the banks, buying NPLs, well, 2 trillion in NPLs we hear, in exchange for bonds. That was one of the major themes for last year. Another one, obviously, was the low interest rate environment, which we saw in Q3, impacting bank margins. Last year, I remember starting the year, most analysts were very bullish about the banking sector, but the banking sector was one of the worst performers. How are you rating this? How are you rating the banking sector going into 2011?
Well, the outlook is very, very bullish for us. We are optimistic that the sector will do well this year. The major overhang that we had on the market last year was uncertainty as to what AMCON was going to do. And that has been taken care of by the end of last year, specifically on December 31st. AMCON chief met with the CEOs of the banks, which they agreed on the valuation model for buying up the toxic asset of the balance sheet of these banks. So we believe that it's a welcome idea for us, as that is going to free up cash for them to do business. And from the news we are getting from AMCON, the instrument that AMCON is going to give to this bank is actually going to be tradable. That means you can discount it immediately. So for banks that need to grow their risk asset, even despite the lull in the economy last year, on the average, the loans still grew like 7 to 9%. And some of the banks even did as well as 15%. So some of them that still have the ambition of growing credit, of generating risk assets, that means that you can now take that bond, go to CBN and discount it, and you have cash immediately to do your business. Also, it affects them on the P&L side, and that's why we haven't seen the rally in the markets. Some of these positions have been written off and they're provided for them in 09 books, in their books in 09. So you find out that most of the things that are coming back now go direct to P&L. But I would like to state a caution here that the market should not anticipate that this will translate to dividend, because most of the investors are taking position based on what will trickle down to them at the end of the day. Because you have to factor into your valuation that these banks are coming from a position of negative shareholders fund, a dilapidated balance sheet. So even if this thing goes to P&L, then you might want to retain it as earnings, which will also translate to going back to shareholders fund instead of just paying back some dividend that is not realistic. So overall, in as much as we believe that there is positive news in the market, we'll still say that much of the rally or much of the outlook that we see will take for probably after the election.
The rescue banks are obviously the ones that will benefit the most from this AMCON deal. How do you see their valuation changing? In your view, has it changed dramatically, or do we still have to wait till we see these transactions with regards to M&A and new investments coming on board before you begin to take a positive view on this?
Having a balanced scorecard, that's you're looking at the fundamental side and you're looking at the sentiment and the technicals. On the fundamental side, I would say there are still loopholes, as we are still not sure as to what the 20 numbers will look like, the 2010 numbers will look like, so as to value the banks properly. But on the other side, I think the market has not been favorably disposed to the rescued banks, and that's why the market sentiment really punished that segment of the banking sector last year. But with the news coming on the heel of AMCON's activity, we believe that should change. I mean, it's going to change the dynamics, and the market will be favorably disposed to the rescued banks. And even since CBN and AMCON has come out clearly to state that there is no likelihood of any of these banks going under, worst case scenario is that it's going to recapitalize most of these banks. So I think that has brought about some level of confidence for people, and you can now say, oh, okay, no matter what happens, at least we are sure that none of these banks will go on, that the worst that will happen is that they're going to recapitalize. And on the back of that, I think it's a good news for the rescued banks.
The one area that the skeptics and perhaps the more cautious investors continue to play up is what is going to drive, what's going to be the catalyst for even the sector. Because like you mentioned, loan growth was very moderate last year.
Okay.
With an election year, we're obviously in an election year, the first half of the year, there's going to be a lot of focus on politics.
Correct.
There's a sense that banks will be less aggressive going. There's really nothing that has changed dramatically in terms of the economic fundamentals that will drive an aggressive growth in loans. Even though, like you mentioned, the banks like the rescued banks will benefit greatly from the AMCON transaction and getting liquidity to grow their risk assets. But the skeptics continue to play that point that the economic fundamentals have not changed dramatically. How do you respond to that?
Well, for us, I would say, in as much as, let's not forget that Nigeria is still one of the best performing emerging markets in the world. And when you're looking at the banking sector, you find out that the performance of the banking sector most times will mirror the performance of the economy. I mean, what goes on the macro scene automatically cascades down to the banking sector, and it perfectly mirrors it. So in as much as we are bullish, I mean, for Q4 last year, the economy did like over 8%. I mean, from Q1 to Q2 to Q3 to Q4, the economy was on a consistent rise when you talk about the GDP growth. And on the back of that, we still see prospects for more growth in the economy. On the back of that, we see, and also since, the CBN has now said that most of the businesses that the banks used to do, they would be forced to leave those businesses, but they will have to also finance those businesses. Because let's take an operator in the economy, for instance, that let's take a segment of the economy that the bank used to operate, say trade finance, and you now have someone that has to run that business. Of course, this is an economy of like 150 million people. The market is there, the population is getting increased, and also on the back of we're seeing a growth in the middle class segment, which will drive the retail purchase for the consumer goods, for the real estate. So on the back of all
they need
this,
to finance trade.
we still believe that there are opportunities for the banks to do business in 2010.